Hi students, welcome. I am Dr. Madhini Jaspella, Assistant Professor, Wales Institute of Science, Technology and Advanced Studies. In this video, we are going to learn about from this Financial Accounting 2 Hire Purchase System, Introduction, Meaning, Definition, Features, Advantages and Disadvantages. Now we can see the Hire Purchase System Introduction. Understanding this psychological concept of humanity, trading institutions exploit the situations. They are adopting a lot of technologies and devices to sell the goods under easy terms and conditions for those buyers who have no minimum amount of money. In this system, we will tell hire purchase system or installment system. Under such a scheme, one may come across with so many attractive captions: interest-free loan, no hidden cost, no margin money, low EMI rates, and so on. Next, we can see the meaning of hire purchase. Hire purchase means a transaction where the goods are purchased and sold on some of the terms and conditions. First, we can see the payment will be made in installments. The second one is the possession of the goods is given to the buyer immediately. The next meaning is the ownership of the goods remains with the vendor till the last installment is paid. The next term, the seller can repossess the goods in case of default in payment of any installment. And finally, every installment is treated as hire charges till the last installment is paid. Next, we can see the definition of hire purchase. A system whereby the owner of the goods hire for periodic payments by the hirer based on the agreement. When a certain number of payments have been completed, the absolute property in the goods will pass to the hirer, but so that the hirer may return the goods at the time of agreement without any obligation to pay any balances of rent acquiring after return. Until the conditions have been fulfilled, the property remains in the owner. Next, we can see the features of hire purchase system. The main features of hire purchase agreement, we can see the first one is possession. The hire vendor transfers only possession of the goods to the hire purchase immediately after the contract for hire purchase is made. The second one is installment. The goods are delivered by the hire vendor on the condition that a hire purchaser should pay the amount in periodical installment. The third one is down payment. The hire purchaser generally makes a down payment, that is the amount signing based on the agreement. The next point is constituents of hire purchase installment. Each installment consists of two elements. The first one is finance charge. The second one is capital payment. The next point is ownership. The property in goods is passed to the hire purchaser on the payment of the last installment and they exercising the option confirmed upon him under this agreement. The next point is repossession. In case of default in respect of payment of even the last installment, the hire vendor has the right to take the goods back without making any compensation. Next, we can see the hire purchase agreement. In a hire purchase agreement, the owner hires goods to the hirer with an option to purchase the goods when they have to make the payment of a certain sum. Under this system, the purchaser who is unable to pay the full price of the asset at one lump sum gets facilitated to acquire an asset after making the payment of an initial amount called premium. The purchaser pays the balance consideration money in installment. After the payment of all the installments, the property in the goods passes to the hirer. The hirer has an option to return the goods during the period of hire. In a hire purchase agreement, the hirer has the right to terminate the agreement for hire at his pleasure and is not bound to pay the value of goods. A hire purchase agreement is a form of bailment. The hirer is given the right to purchase the goods on certain conditions. However, it is an option, not an obligation to purchase. The hirer may elect to purchase the goods, and when he does so, after he fulfills all the conditions which was mentioned in the agreement, the title of the goods will pass to the person. but he may elect not to do so, and in odd event he is entitled to return the goods and terminate the agreement in the manner provided therein. Next, we can see the advantages of hire purchase system. The first advantage is spreading the cost. A car is an expensive purchase, we can say normally, and in many cases having a readily available lump sum of cash to buy one is not possible. Hire purchase means the payment can be spread out over time, making buy a car more affordable. Then we can see fixed monthly repayments. When you take out a hire purchase agreement, the interest rate is fixed from the time you start the contract. That means you will pay the same amount every single month, making it far easier to fit in with your monthly budget. The next one is reduce repayments to fit your budget. There are a couple of ways to reduce your monthly repayments. Paying a bigger deposit will reduce the overall amount and interest you need to pay back. Having flexible terms from 1 to 5 years means you can also reduce the monthly amount by choosing a longer term. Then fewer restrictions. While some leasing and financing options come with mileage or conditional restrictions. The next point is it can be paid off yearly in most cases. Most hire purchase agreements will allow you to pay your finance off earlier. So if you want to settle your agreement either partially or fully before the end of the term, you could make yearly repayments. The next point is get accepted with less than perfect credit. Hire purchase is the easiest type of car finance get accepted for the purchasing of car. So if you have worried about your credit rating affecting your chances of approval, hire purchase may be the best option. Next, we can see the disadvantages of hire purchase system. Higher cost than purchasing outright. It is the cost is very higher comparing to the other purchase system. Interest will be added to your monthly payments, making hire purchase more expensive than if you paid for the asset in full upfront. The next point is interest rates are based on credit rating. Generally, to get the best interest rates on a hire purchase agreement, have a good credit rating. Those with poor credit ratings can often find that they offered higher interest rate and over the duration of the term. The next point is missing or making late payments could affect your credit score. A hire purchase agreement is a type of credit, so it's usually reported to the major credit reporting agencies. This means if you fail to make a payment or make it late, it could be reported and therefore have an impact on the purchaser credit score. Then we can see the rights and duties of hire vendor. In a hire purchase agreement, a hirer has the right to terminate the agreement for hire at his pleasure and is not bound to pay the value of goods. A hire purchase agreement is a form of bailment. The hirer is given the right to purchase the goods on certain conditions. The rights and duties of hire purchaser. The first point is purchase at any time with a rebate. The next point is the hirer can terminate the agreement at any time. Then appropriate payments in respect of 2 or more agreements. Then assignment and transactions of hirer's right or interest under hire purchase agreement. Next, we can see the terms used in hire purchase system. The first one, hire vendor. Hire vendor is a person who delivers the goods along with its possession to the hire purchase under hire purchase agreement. Then hire purchaser. Hire purchaser is a person who obtains the goods and rights to use the same from hire vendor under a hire purchase agreement. Then cash price. Cash price is the amount to be paid by the buyer on outright purchase in cash. Then down payment. Down payment is the initial payment made to the hire vendor by the hire purchaser at the time of entering into a hire purchase agreement. Then hire purchase installment. Hire purchase installment is the amount which the hire purchaser has to pay after a regular interval up to certain period as specified in the agreement to obtain the ownership of the asset purchased under a hire purchase agreement. It comprises of principal amount and the interest on the unpaid amount. Next, hire purchase price. Hire purchase price means the total sum payable by the hire purchaser to obtain the ownership of the asset purchased under based on the hire purchase agreement. It comprises of the cash price and interest on outstanding balances. Thank you.